Let's spend a few minutes talking about the statement of cash flow. Hopefully, what you've seen in previous courses related to accounting is how a statement of cash flow is developed, how it's created and constructed. We're not going to go back and go through that entire process here. But what we do want to do is talk about the three forms of cash flow, or the three types of cash flow, and why we focus on that in finance. So you may recall that on the statement of cash flow there are three sections: the operating, investing, and financing cash flow sections. And you'll remember that operating cash flow is the net cash flow from what we do as a business for a living. So this is related to our operations. What products do we make, or what services do we provide? The investing cash flow is the cash flow from investing in assets. A lot of times we get caught up in the word investing. We think about stocks and bonds. That's not what we're talking about here. Remember that a firm invests in assets like property, plant, and equipment, accounts receivable, inventory, etc. So when we're thinking about our major investments, our investing cash flow is really going to focus on the net cash flow from investing in those large fixed assets. That's what's going to drive that. Finally, financing cash flow, that's the other side of the balance sheet. That's our liabilities and our equity. What cash flow are we receiving from or paying to our creditors and our equity investors? So in this class, we're going to focus on cash flow, because cash flow is going to be the basis of how we value an asset. Promises are good, IOUs are good, but as we look at what an asset does for us, what an asset generates for the firm, we're going to measure the benefit from the asset in terms of cash flow. Specifically, we're going to focus on two types of cash flow. One of them we're going to discuss in this video, the other one we're going to discuss later. The two types of cash flow we're going to focus on are operating cash flow, which again comes from the statement of cash flow, and we're going to focus also on free cash flow. So operating cash flow is the cash flow from what we do for a living. Free cash flow would be the cash flow that would be free to be distributed to our investors and our stockholders and other folks that we owe money to. Now, I said that we're not going to recreate a statement of cash flow. You've already done that. You should know how to do that, but we're not going to recreate that. What we're going to do is we're going to use the following equation that you see on your screen to calculate operating cash flow. Operating cash flow, we're going to say, is equal to earnings before interest and taxes minus taxes plus depreciation. And there are some issues here, so let's look at them. All of these items, EBIT, taxes, and depreciation expense, come from the income statement. So these numbers are going to be easy for us to locate and easy for us to use. If you think about a statement of cash flow method, we can either start at the top and work our way down, or start at the bottom of the income statement and work our way up, and deduct items out or add items back in. In this case, if we take EBIT minus taxes, we're basically almost at net income. And then we're going to add back the one item on the income statement that is not cash. We're going to add back depreciation. So when you think of the statement of cash flow, instead of constructing a statement of cash flow, we're going to use this equation and the numbers that we pull from a particular income statement to calculate operating cash flow. This is equivalent to what you do if you use the top-down or bottom-up method or the indirect or direct method from your accounting course. Now we're going to, again, discuss this equation some more in class and how we're going to use it and how it all fits together.